Natural gas on the daily breaks support with possible further downside? The daily chart of natural gas depicts a pronounced bearish divergence between the price action and the commodity channel index, culminating in a breakdown below a critical ascending support trendline. This divergence manifests as the price forming successively higher highs starting from a base around 3.360 in early October 2025, rallying to an intermediate high near 4.800 in mid-November and peaking at approximately 5.320 in late November, while the CCI fails to confirm this strength. Specifically, the CCI registers an initial peak above plus 250 during the early uptrend phase, but subsequent highs decline progressively to around plus 200 and then below plus 100, even as price pushes to new highs. This mismatch indicates waning momentum, with buyers losing conviction despite the upward price trajectory, often a precursor to reversals in momentum oscillators like CCI. The bearish signal intensifies with the price breaking decisively below the key ascending support trendline, red dashed line connecting lows from October, marked by a red downward arrow at the breakdown point around 5.000 in early December 2025. This breach, accompanied by the price crossing below stacked exponential weighted moving averages and filling a fair value gap, confirms seller dominance. Post-breakdown, the price accelerates downward to test levels near 3.658, with the CCI plunging into oversold territory below zero, reinforcing the potential for further downside. Colored background zones shifting from bullish green to bearish red further highlight this momentum shift, suggesting the uptrend has likely topped out, with risks of deeper corrections toward lower supports like 3.330. In contrast, the 1-hour chart hints at an emerging bullish divergence amid the ongoing downtrend, potentially signaling short-term exhaustion in selling pressure. The price exhibits a steep decline from a high near 5.320 on December 25, 2025, forming lower lows, dropping to around 3.290 by early January 2026, with increased volatility in the final bars. However, the CCI black line diverges positively, while price carves out progressively lower lows. The CCI's corresponding troughs rise from a deep oversold reading around minus 200 to higher lows near minus 180, failing to confirm the price weakness. This classic bullish divergence suggests diminishing downward momentum as sellers struggle to push the oscillator to new extremes despite lower prices, often indicating a potential rebound or reversal. Supporting elements include the CCI rebounding toward neutral levels, crossing above minus 100, and the price approaching a possible support zone near 3.39. While the overall structure remains bearish, evidenced by the downsloping moving averages, the divergence could foreshadow a countertrend bounce, especially if confirmed by a break above near-term resistance like 3.65. You should monitor for oversold CCI readings to unwind, but this short-term bullish hint contrasts with the daily chart's broader bearish outlook. The daily chart of the ProShares Ultra DJUBS Natural Gas ETF, BOIL, a 2x leveraged vehicle tracking natural gas futures, displays a clear downtrend from a peak near 44.76 in late 2025, collapsing through multiple supports to current levels around 21 by early January 2026. Price action shows a sharp breakdown as shown by the red downward arrow below stacked exponential weighted moving averages, with increased volatility and long upper wicks indicating rejection at highs, and the price has since traded in a lower range. The CCI in the lower panel reflects this weakness, dropping deeply into oversold territory below minus 100, confirming strong selling momentum. Overall, the daily timeframe remains firmly bearish, aligning with the recent plunge in underlying natural gas prices amid mild weather and high inventories, suggesting risks of further downside unless a major catalyst emerges. On the shorter 1-hour timeframe, BOIL exhibits potential exhaustion in the downtrend, hinting at a bullish reversal setup. From a high near 48, the price has formed a steep decline with lower lows, reaching around 21, but recent bars show stabilization with small green candles and reduced downside momentum. The CCI black line has rebounded sharply from deep oversold levels around -200 to -73.607, crossing above key thresholds and curving upward, while the CCI moving average, blue line, flattens near zero. This positive shift in the oscillator, a mid-price holding above recent lows and approaching a potential demand zone, light blue rectangle, suggests building buying pressure and a possible counter-trend bounce. Colored backgrounds transitioning from pink, bearish, to greener hues support this short-term relief rally idea, potentially targeting resistance near 28 to 30 if momentum holds. The charts highlight a classic multi-timeframe conflict common in leveraged commodities like oil. The daily view dominates with a strong bearish bias, driven by the broader natural gas sell-off, warning of continued volatility decay and downside risk in a leveraged product prone to rapid losses. However, the 1-hour chart's emerging bullish signals, via CCI rebound and price stabilization, point to a near-term oversold bounce or reversal attempt. This lower timeframe strength could foreshadow a temporary relief rally, but it would need confirmation, e.g., break above short-term MAs, to challenge the prevailing daily downtrend. Caution is advised. The daily chart of the ProShares Ultrashort Bloomberg Natural Gas ETF, KOLD, a leveraged inverse vehicle tracking natural gas futures, shows a strong uptrend from lows near 19.00 in late 2025, rallying sharply to highs around 39.90 by end of December. Price action features higher highs and higher lows, above stacked exponential weighted moving averages, blue, black, red lines. Minor pullbacks find support on the MAs, reinforced by blue upward arrows marking bounces. The CCI in the lower panel supports this strength, rising from oversold levels below -100 to neutral/positive territory, confirming robust upward momentum. This bullish setup reflects the recent decline in underlying natural gas prices, positioning KOLD favorably in the prevailing bearish gas environment. On the 1-hour timeframe, KOLD displays potential exhaustion in the uptrend, suggesting a bearish reversal pattern. From a peak near 39.90, the price is pulled back with lower highs and increased volatility, dropping toward 31, with recent bars showing red candles and rejection at overhead resistance. The CCI, black line, has rolled over from overbought levels above +200, declining sharply toward -79 and curving downward, purple moving average flattening, indicating fading upside momentum. Colored backgrounds shifting toward pink/red zones highlight this short-term selling pressure, with price testing a potential supply area, light blue rectangle. This hints at a corrective pullback, possibly targeting support near 28 to 30 if weakness persists. These charts illustrate a typical multi-timeframe divergence in leveraged commodity ETFs like KOLD. The daily timeframe maintains clear bullish control, benefiting from the broader natural gas downtrend. Prices down in the past month despite seasonal expectations, supporting continued upside potential in KOLD amid forecasts of milder early January weather curbing demand. In contrast, the 1-hour chart's emerging bearish signals via CCI rollover and price rejection point to near-term profit-taking or reversal risk, offering tactical short opportunities against KOLD or longs in natural gas proxies. This lower timeframe weakness could manifest as a healthy retracement within the daily uptrend, but would require confirmation, e.g., break below short-term MAs, to threaten the bigger picture bullish bias. Given KOLD's -2x leverage, moves are amplified in both directions. Traders should exercise caution, as short-term bounces in natural gas, e.g., on colder forecasts, could quickly pressure KOLD lower, while sustained gas weakness favors the daily trend. The daily chart of the United States Natural Gas Fund, UNG, an unleveraged ETF tracking front-month natural gas futures, reflects the broader downtrend in natural gas prices, declining from highs near 16.91 to current levels around 12 by early January 2026. Price action shows lower highs and lower lows, with a sharp drop, red downward arrow, below stacked exponential weighted moving averages, blue, black, red lines, and rejection at overhead resistance. Pullbacks have been shallow, finding limited support near fair value gaps and minor bounces. The CCI in the lower panel confirms persistent weakness, remaining deeply oversold. Readings like -74.748, with little meaningful rebound, underscoring strong selling pressure. This bearish profile aligns with a recent monthly drop in Henry Hub natural gas prices, driven by mild early winter weather, ample inventories, and high production despite growing LNG exports. On the 1-hour timeframe, UNG shows emerging exhaustion in the downtrend, hinting at a bullish reversal setup. Price has formed progressively lower lows from 16.5 down to around 11.50, with recent bars stabilizing near potential support, light blue rectangle, and small green candles indicating reduced selling intensity. The CCI provides a clear bullish divergence. While price carves out new lows in late December, the CCI's corresponding troughs form higher lows from deep oversold around -250 to higher readings near -66.240 and curving upward, black line rebounding, purple mapped line flattening near zero. This classic positive divergence signals waning downward momentum as sellers fail to drive the oscillator to new extremes despite lower prices, often preceding a rebound or trend reversal. Supporting factors include the CCI crossing above oversold thresholds and shifting colored backgrounds from pink/red, bearish, to greener tones, suggesting building buying interest. This could target near-term resistance around 14, if confirmed. The charts present a multi-timeframe conflict typical in commodity ETFs like UNG. The daily timeframe asserts dominant bearish control, mirroring the structural weakness in natural gas amid seasonally mild weather and robust supply, with risks of further downside toward $11 or lower if inventories remain elevated. However, the 1-hour chart's bullish divergence and price stabilization point to short-term oversold conditions ripe for a relief rally or counter-trend bounce, potentially driven by colder January forecasts, increasing heating demand. This lower timeframe strength may offer tactical long setups for swing traders, but it would need confirmation, e.g., break above short-term MAs or sustained CCI uptrend, to meaningfully challenge the daily bearish bias. Overall, favor the higher timeframe. Remain cautious on longs unless weather turns sharply colder, as UNG's direct exposure to contango/decay in futures can erode gains in sideways markets. Current spot/futures support the daily downside tilt, but any demand surge could quickly validate the hourly bullish hint. To access some share trading ideas, consider subscribing to the Patreon page, where each weekend a bullish share scan is run on blue-chip shares across various regions of the world's stock markets. These were the trades made during December, showing a return of 4.54%. Again, consider subscribing to the Patreon page to access the scans each week. Links are in the description below. Lastly, let me know in the comments if you prefer me narrating the daily videos, or do you prefer Pete's voice? He says he won't be offended if you choose me. I'm not sure about that. Hit that like and subscribe and share button to help support the channel. Thanks again, and see you in our next video update.